Hi students, and welcome to Accounting 1115, Computerized Accounting. In this video, we're going to be going over Chapter 6 and the steps on how to complete your homework for Chapter 6. So Chapter 6 is investing and financing activities. I'm going to actually using the test drive sample company on QuickBooks Online and be following the steps in your textbook for Chapter 6. Learning how the steps of Chapter 6 are similar to what you're going to be doing on your homework. So reviewing this video and reviewing how to do the steps in Chapter 6 on your test drive will help you with your homework assignment. So let's get started. So the first thing we're going to talk about is fixed assets. So in this section, you'll be recording the acquisition of fixed assets. Fixed assets are long-term tangible property that a firm owns and uses in the production of its income. It is not expected to be consumed or converted into cash any sooner than at least 1 year's time. So normally a fixed asset is something that you're going to own for more than a year. So normally a fixed assets cost is depreciated over time, and this is a means of allocating its cost over its useful life. So the depreciation is recorded to a depreciation expense account and added to an accumulated depreciation account, which is a contra asset account. That process will be explained in the chapter and on adjustment entries when we do that later on. Now, the first thing we're going to do is to add an asset. You will use the check task assessed by clicking the new icon. So we're going to click on the new icon. All right. Now, alternatively, you could purchase new fixed assets using a credit card or take on a new debt. But the sample company had a fixed asset account for trucks. So we're going to use that to record the purchase of a truck. So if you were to purchase some other type of fixed asset, such as equipment, you would need to create a new fixed asset account named equipment. And we're also going to go over those steps. All right, so once we click on the new icon, we're going to come down here under vendors and we're going to find the option for check and click on check. All right, so from here, what you're basically doing is you're creating a check that will print to purchase an item. And this specifically what we're going to be purchasing is a fixed asset. Okay, so the first thing we're going to do is we have to select the payee. Now in the textbook, the payee that's being used is called Sunset Auto. All right, so to be able to see if that vendor is already in the system, just go ahead and start typing the name. And if nothing comes up, then we know we're going to have to add that vendor. So go ahead and delete that out and come over here and click the add new. All right, so what we're going to do here is now enter that vendor's name, and the vendor we are using to purchase this asset is called Sunset Auto. Now it is a vendor. All right, so to be able to change this, if you would need it to, you would click on the drop down menu and there's 3 options come up: vendor, customer, and employee. This is a vendor. Okay, it's because we're purchasing an item from them, so we're going to list them as a vendor. So once you have their new name entered and you selected the vendor, just go ahead and hit save. Okay, from here, you can change other options as well. You can change the bank account that you're using. We're going to continue using our checking account. You can select a different payment date, and you can also enter a different check number. For the purposes of this example, we're going to leave the payment date and the check number as the default number. And I'll explain to that when we get to the next payment. All right, now, your next step is we're going to come down here to the category details and we're going to fill this information out. And the first thing you're going to do is come over here to category. And when you click on it, it's going to be another drop down menu. Go ahead and click on the drop down menu. Now what this is asking you basically what account is this purchase going to be posted against. That's basically what this category is asking you. What account are you going to post this against? All right, so we want to find a fixed asset. So you can come over here and you can see that you have listed expenses and what kind of expense they are. So you're just going to keep scrolling down and scrolling down. And what we're looking for is a fixed asset that says truck there, fixed assets, truck. All right, now when you purchase an asset, and it's an asset that depreciates, you're going to have two sub-accounts associated with it: original cost and depreciation. So you're going to go under original cost because we want to record the purchase of this truck under original cost because it's going to capture the purchase price of the asset. So click on original cost, and this is what we're going to use to record the purchase of this truck. Now, in the description field here, you can add any information that's necessary. You could add the make and model. You could add the VIN number. Anything that would help you identify. If your company has multiple trucks, then you would want to add a description to identify exactly which truck you're purchasing. All right, and next thing you can do is we're going to come over into amount. The amount that we're going to purchase the truck for is $2,500. So you just type in 2,500. All right. You have, we'll go ahead and hit that drop down menu. You can also add more item details if necessary. And then you also have a memo line. And the memo line, if you remember correctly, if you've ever looked at a check, there's a section on the check for memo. And that's where you can add any notes onto the check. So if you needed to add a note to this check for the vendor to identify any information, you could put that information in this box right here. You can also attach documents to this check. That would be maybe a sales contract or a copy of a title or sales agreement, anything that would be important supporting documentation that you may want to have attached to this check. So once you have all your information entered, you can just hit save and close, but we're going to add another one. So we're going to click save and new. All right, so that was our first purchase of a fixed asset. And so basically, this is one way you can record a fixed asset on your books, because obviously, you're purchasing a fixed asset. So you can cut the check and record the purchase of that asset to your books all in one function in QuickBooks. So the next asset we're going to purchase is going to be machine and equipment asset. It's still a fixed asset, but it's specifically equipment. Okay, so let's come over here and go to the payee. All right, and the payee that we're using in the book is called Tanya's Nursery. So let's start typing in Tanya. It's already in the system, so we don't have to add her. So just go ahead and click on Tanya's Nursery. All right, now I want you to notice the check number automatically changed. We started with check number 781, and now we click save and new, and it's already put in a new check number. So I wanted to point that out because normally you write checks in a certain sequential order. So whenever you start writing your first check in QuickBooks, you're going to want to make sure that that is the next that you put in here in this box, the next check number that you're going to be using. So if you're starting from square one, you would start with check number 1. And QuickBooks is going to remember that, and automatically every time you do a check, it's going to update that for you. Okay. So again, all the same information that you had in the last one that you can use to update. The first thing we're going to do is going to come over here to category. All right, now I'm going to go ahead and tell you that machine and equipment is not in here. The only fixed asset that was already loaded was the truck. So we're going to have to actually add a new account. So when you click on the drop down menu, add new is your first option. So just go ahead and click add new. All right, this window should look really familiar to you by now. You've added new accounts a lot now, so far. So this is not anything you haven't seen before. All right, so the first thing we're going to do is come up here to account type, and the account type we want is fixed assets. So we're going to come up here and we're going to select fixed assets. Okay, the detail type we want is machine and equipment. So we're going to scroll down till we see machine and equipment. All right, and from here, you could change this if you needed to. You can make it just equipment, or you could give it a specific name. But for the purposes of the book, we're just going to leave it machine and equipment and not change it. All right, now we do want to track depreciation of this asset, so you're going to go ahead and click that box. All right. Now you don't need to fill out any of this information because this information will automatically get filled out when we enter this check. So we're just going to go ahead and hit save and close. All right, so see here, it's now selected the option for machinery and equipment. And again, you can enter any kind of description information you would like about this piece of equipment that you're purchasing. But we're going to just go ahead and skip over to the amount. The amount that we're purchasing this equipment for is $1,000. You're going to enter in $1,000. All right. Again, you can add any more item details in this area, but for the purpose of this book, we're not going to use that. We're going to skip it. You can also enter a memo that would print on the check, and you can attach any documents that would be necessary for the purchase of this equipment. And again, that could be like a warranty, a sales receipt, anything that you have handy that you want to attach to the copy of this purchase. All right, so once you have all this information in, you're ready to go ahead and hit save. So this time we're just going to hit save and close because we're done with the purchasing of fixed assets. All right, so there we've just done 2 purchases. We've purchased a truck and we purchased a piece of equipment, both recorded as a fixed asset. The next thing we're going to talk about is long-term investments. The acquisition of a long-term investment is another type of investing activity. A long-term investment is the purchase of a financial instrument such as a bond, stock, common or preferred stock. And this is it's going to mature in more than a year, hence the term long-term. So we're going to record purchases of a long-term investment in the sample company. All right, so the first thing we're going to do is, again, we're going to start with the new icon, and we're going to go right back to check. All right, so again, check number automatically updated. We started with 71 with the truck, 72 with the equipment, and now with the purchase of some long-term investments, check number 73. So it automatically updates. All right, now the vendor we're using is called Scottrade, and Scottrade is not in the system. So you see, we start typing the name out, and if it doesn't show up, then you know it's not in the system. So we're going to go ahead and click Add New, and we're going to enter the name Scottrade. He is a vendor, so we don't have to change the type, and we just go ahead and click Save. All right, and you can also come in here and add a mailing address if you wanted to. We don't have an address to add, so we're not going to do that, but that is an option you can do. All right, now to make sure that this gets recorded as a long-term asset, we're going to need to come to our category, click that drop-down menu, and we're looking for other asset. All right, so I don't see other asset already in there, so we're going to have to add new. So go ahead and click the add new. And there's that familiar box again. So the account type that we're going to look for is other assets. Okay. So not other current assets. Now remember, current asset is an asset that has a life of less than a year. Okay, is expected to have a turnaround life of less than a year. So we're going to look for other assets. So don't get confused and click other current asset. Do not click other current asset. We want other assets. Okay, so we're going to click other assets. Now the detail type we're looking for is long-term. Okay, so we're looking for other long-term assets, and there it is right there. Now this time we are going to change the name. We're going to change the name to investments. Okay. All right, so once you have that entered, go ahead and click Save and Close. And there we go. All right, so just like with all the other ones, this is information you can add. You can add descriptions, you can add a memo, you can attach documents. But for the purposes of this example, we're just going to go ahead and enter the amount. The amount of the investment that we're purchasing is $3,000. So just go ahead and enter that amount. And once you're done, you can go ahead and click Save and Close. Okay, so we just purchased a long-term investment. Pretty easy. All right, so let's move on to the next step. All right, so in the next section, we're going to talk about equity transactions, which is your common stock, your dividends, again, other investments, and owner withdrawals. So in a corporation, the sale of common stock and the payment of cash dividends to shareholders are two common financing activities. Common stock is a stockholder's equity account. Dividends are a distribution of earnings to shareholders, and they're accounted for as a reduction in retained earnings. Both of these are cash activities, and the sale of stock results in a cash receipt. So you will account for it as a bank deposit, whereas the payment of a cash dividend results in a cash payment. Okay, so the receipt, so the sale of stock results in a cash receipt, and the payment of a cash dividend results in a cash payment. Okay, so two previous payments from customers appear when you attempt to record a bank deposit from the issuance of stock. These payments have been received but not recorded. We're going to ignore those for now. All right, so to simplify this transaction, we will assume that the common stock is no par common stock. So no additional paid-in capital exists. Also, we're going to assume that the declaration, record, and payment dates are all the same. Now, in a sole proprietorship, there is no common stock or dividends. Instead, there are called owner investments and owner withdrawals. All right, owner investments are recorded by entering a bank deposit to the owner's equity account, or sometimes called their capital account. And then owner withdrawals are recorded by entering a check to the owner's equity account, and it'll be recorded as a withdrawal. So the sample company is a corporation. An example of these transactions are not provided, but that is how those are recorded. If you remember, if you took Financial Accounting 1, back in Financial Accounting 1, we talked about owner capital and drawing accounts. And they are accounts that go directly against the owner's equity. All right. Now, our sample company, again, is a corporation. So we're going to not be able to do examples of a owner investment or withdrawal, but we are going to do to record the sale of the stock and payment of cash dividends. Okay, so, all right, so the first thing we're going to do is we're going to record the deposit of funds from the sale of common stock. All right, so we're going to go back to the new icon, and this time we're going to go over here to bank deposit. We're going to click on bank deposit. All right, so these are the two that we're going to ignore because you remember correctly. It said that two previous payments from customers appear when you attempt to record a bank deposit. These payments have been received but not recorded, so we're going to ignore those for now. All right. All right, so since we're ignoring these, we're going to come down here. So we're not going to select payments to include the deposit. So we're going to add funds to this deposit. So we're going to come down to this section right here. And I want you to go ahead and click in the received from box, and a drop down menu is going to appear. All right, so the what we're going to do is go ahead and click on the drop down menu, and we're looking for a company called WB. So you can scroll or you can type. So let's go ahead and start typing. All right. All right, so I do not see them in there, so we're going to have to add. So go ahead and click add new, and the name again is WB Investments. Now, when you're doing your homework assignment, they will give you the names as well. This is for the sample company, and we're in the test drive mode. And I'm following the steps and instructions in your textbooks. So your homework is going to be very similar to this, but it's not going to be exactly like this. All right, now, this isn't a customer, it's a vendor, so we're going to need to change the type to vendor, and we're going to go ahead and click save. All righty. All right, so let's go here to account column. Now, the account we're going to record it to is the equity account. All right. So the first thing we're going to do is check to see if you already have an equity account set up. You can scroll or you can start typing the name equity. All right, so no, all we have is the opening balance equity. So we want just equity. So we're going to go ahead and hit the add new. And we're going to select equity from the account type box. All right, and we're going to select common stock. And we're going ahead and set the common stock name. We're not going to save this or change this in any way. Okay, so we'll go ahead and hit save and close. Now, you could add a description if you wanted to, but for an example of the book, it does not have us adding a description. So we're going to come over to payment method. All right, in payment method, we're going to select check as the payment method. Then we're going, and now if you had the check that you are depositing, you could add that check's number here in the reference number if you wanted to, or if you had like a purchase order for this from them, or any kind of other reference number, invoice number, purchase order number, or check number, you could use as a reference number. The book did not provide that. So we're going to go ahead over here and we're going to enter the amount. And the amount that we are depositing for the sale of stock is $10,000. Okay, and it's simple as that. And again, it's a deposit. But this is for a deposit. So you could add a memo for the deposit if you needed to. You could add any attachments you wanted to for this deposit. But for the purposes of the book, we're not doing those steps. So right now, even though we do have 2 payments up here, we're not selecting these payments for a deposit. We are adding funds because we have a check that we're going to deposit. Now, again, this is for the sale of stock. So what we did was we sold stock to a company called WB Investments. And we received a check from them for the stock they purchased, and they purchased a total of $10,000 in stock. All right. So what we're going to do is we'll go ahead and come over here and hit save and close. And we just recorded a deposit of $10,000 for common stock that we sold to WB Investments. Now, the next thing we're going to do is when you are a corporation and you sell stock, you also pay dividends to your shareholders. So your shareholders are those who own the stock in your company. So here what we're going to do is we're actually going to record payment of dividends. So we're going to come over here to the new icon and we're going to select check. All right, check number is already updated, so we don't need to change that. And we're just going to let the default date stay. We don't need to change. We're not going to be changing the date. All right, so the payee we're going to be using is shareholder. So let's see if it's already in the system. And there are no vendors or payees in the system titled shareholders. So we're going to click add new and type in the name shareholders. Select vendor and click save. All right, now, so the next thing to do is we're going to come over here to category details, and we're going to click in the box, and we're going to click on the drop down menu. And again, the payment of dividends is recorded in the retained earnings account. So we're going to look for the retained earnings account, and there it is. All right, you could add a description if you needed to, and then we're going to come over here and add the amount. And the amount that we're paying to our shareholders is $1,250. All right, and that is it. That is all we need to do. Go ahead and hit save and close. And we have just recorded check number 74, payment to our shareholders for the payment of dividends. Now let's talk about long-term debt. Okay. So the borrowing of funds on a long-term basis and the repayment of debt are two additional financing activities. Both of these are cash activities, and that the borrowing of funds results in a cash receipt. You will account for it as a bank deposit, whereas the payment of the debt results in a cash payment. So there's two, again, there's going to be two previous payments for customers that appear when you try to record a bank deposit from the borrowing of funds. And so these payments have been received but not recorded. So again, we're still going to ignore those. All right. So this company has decided to take the funds from the stock sale recorded above and the new borrowings below to pay off old long-term debt with interest. Okay. So first thing we're going to do is we're going to record the receipt of funds from borrowing and the payment of long-term debt in the sample company. Okay. All right. So to record the receipt of the funds from borrowing money, we're going to come over here and click the new, and we're going to come to bank deposit. All right. So these are the payments that we're still going to continue ignoring. Okay. All right. So we're going to record the payment, the deposit of funds, and the payee is going to be oh, sorry. I'm thinking about bank deposits. I'm thinking about checks. Okay. We're going to come down here from the received fund from, we're going to click in the box, and it's received from the Bank of La Jolla. So let's start typing in bank. I don't see anything already in there from bank. So we're going to have to add new. All right. So we're going to type Bank of La Jolla. All right. They are a vendor. So we're going to hit vendor and click save. All right. All right. We're going to accept the given date provided. We're not going to change it. But we are going to go over here to account now, and we are going to enter notes payable, long-term liability. Okay. Now, notes payable is usually, yes, notes payable is usually used when the debt is going to extend over a year, hence being, and you can see that notes payable is linked to long-term liability. And again, a long-term liability is a debt that's going to take more than a year to pay off. So we received the money in the form of a check, and we received a total of $15,000. All right. So your screen should look like this. And so when we're done, we can go ahead and click save and close. So what we just did is we recorded the receipt of money that we borrowed. We borrowed money from the Bank of La Jolla. They cut us a check for $15,000. All right, so we just recorded the bank deposit of that check. They cut us for $15,000. Now it's money we borrowed, which is why we recorded it to notes payable. All right, so what that bank deposit is going to do, if you want to think about it in terms of a journal entry, is it's going to record an increase to your cash. Okay. And it's going to, so it's going to be a debit entry to cash, and then it's going to set up that notes payable as a liability. So it's going to credit notes payable on your ledger. Okay. So that's what we just did with that transaction. All right. So the next thing we're going to do is we're going to record repayment of long-term debt with interest. All right. So here, what we're going to do is we're actually going to record a payment of a debt. So what we just did was recorded the receipt of a loan. Now we're going to record payment of a long-term debt. All right. So payment means go ahead and click on the new and go over to check. All right. The payee is Bank of America, and the only bank we have in there is Bank of La Jolla. So we're going ahead and add Bank of America. So let's come over here, Bank Bank of San Diego. I read that wrong. So Bank of San Diego, that's what the book has us doing. All right. Once again, we're going to enter them as a vendor. And we entered, when we received the loan from Bank of La Jolla, we entered them as a vendor because we're going to be repaying them. So that's why we entered them as a vendor. So we already have a loan with Bank of San Diego. And what we're going to do is now we're going to be using the money that we received from Bank of La Jolla, as well as the money we received from selling the common stock. And we're going to pay off Bank of San Diego. All right, so let's go ahead and click save. All right. Now, if you notice, every time we record a deposit and a payment, your checking account balance updates. I think that's kind of cool. All right, so check number and payment date, we're going to leave default, and we're going to come down here to the category and go ahead and click in that category box. All right, so what we're going to look for is we're going to select notes payable. All right, so let's go ahead and type it in. There it is, notes payable. Because now what's going to happen? Now what's going to happen is it's going to actually record the paying off of notes payable. So what it's going to do here is it's going to debit the account notes payable, zeroing it out, and credit cash, because now we're going to reduce our cash balance. All right. So we're going to come over here and type in the amount of $25,000. So now we are paying this note off with interest. So the so now what we're going to do is come down here to line 2. So now, and we're going to go to line 2. I want you to click on that category box again in line 2. So now we're going to record the interest, because we paying off a long-term debt with interest. Okay, so this is what was sitting in our liability account. All right, but you know, whenever you're paying back a loan, you pay it with interest as well. All right, and interest is recorded as separately as an expense account. So we're going to click on category, and we're going to look for expenses, and we're looking specifically for interest expense. All right, so you can continue scrolling, or we can type in interest. And all it has is interest earned. Okay, so we're going to add new. All right, so the account type is going to be expense, and then we're going to select interest paid in the detail type. And in the name, we're going to change it to interest expense. And then click save and close. All right, so then we're going to go ahead and tab over. And the amount of interest that we're paying is $1,000. All right. So once you have all that information entered, you can go ahead and click save and close. It says a check with number 75 already exists. Do you want to save anyways? So click no. So that's really great. So if you accidentally duplicate a check number, QuickBooks is going to catch that for you. So that's really great. So we're going to go ahead and we're going to select 76 and click save and close. Oh, it says something exists with 76. So let's see about 77. There we go. All right. Now, the next section we're going to talk about, and this is the last section, I believe. I'll check that. Yes, this is the last section. So this is the last section I'm redoing in this chapter. And we're going to be talking about the acquisition of a fixed asset in exchange for long-term debt. All right. So you've completed the process for recording an investing activity with purchase of a fixed asset and purchase of a financing activity. Oh yeah, we've recorded an investing activity. a financing activity. So both of these transactions were recorded by affecting the checking account, which is your cash. Okay. All right. So when you purchased a fixed asset and then you borrowing on a long-term basis, both those transactions were recorded by affecting the checking account, which is also your cash account on your ledger. So occasionally a company acquires a fixed asset by issuing long-term debt. So an example, purchasing another truck in exchange for a note payable. Okay, so this cannot be recorded using the checking account since no funds were exchanged. Instead, you will use the journal entry process to record the fixed asset acquisition in the long-term debt borrowing. All right, so what's happened here is you didn't actually receive any money. All right, you went and borrowed money to buy a truck. All right, so you went and borrowed money to buy the truck. So if you borrowed money from the bank doesn't pay you, and then you buy the truck. What happens is the bank sends the money directly to the vendor. All right. But now you do have a debt you have to record on your books because you're not have to pay that bank back. All right. So since there's really has not been any exchange of cash, we can't use the check function. But we need to record the note payable and the acquisition of the fixed asset on your ledger. So the best way to do that is by doing a journal entry. So to do that, we're going to come over here and click the new icon. And we'll come over here under other and click journal entry. All right, we're not going to update the journal date or the journal number, but again, these are normally in sequential order. So you want to make sure that they're not duplicated. All right. So the first thing we're going to do is we're going to record our debit. So we're purchasing an asset. All right. So we're increasing our assets. Assets are always recorded with a debit. So our first line is going to be for the fixed asset. All right. So we're purchasing a truck. So we're going to look for the fixed asset truck, and you're always going to record it under original cost. All right. The amount that we are purchasing the truck for is $3,400. So you're going to record that $3,400 under original cost for the truck. All right. Now, we borrowed money to borrow this truck. So now we need to record that liability on our books. All right. And we're going to record it under notes payable. So I need to look for the account notes payable. And it automatically autofills in the credit amount for you. All right, because debits and credits always got to balance. So that's something that QuickBooks kind of does for you, kind of autofills to help you balance. All right, now over here, you could add a customer or a vendor to tie it to this particular notes payable liability. So if you borrowed money from Bank of San Diego to purchase this truck, you can come over here and click Bank of San Diego, and it's going to show that that payable is linked to that vendor. And it makes it easier to pay the bills as well. All right, so once that's done, you can go ahead and click Save and Close. And you've recorded that journal entry to your ledger. And it was simple as that. Simple as that, to record the acquisition of a fixed asset in exchange for a long-term liability. All right, so that is it. Again, this was using our sample company and the test drive mode, following all the steps and instructions in your textbook for QuickBooks Online. This should help you with your homework assignments. Your homework assignments are going to be very similar to this. They're going to be asking you to do the same steps that we just went over doing in the book. So I hope this helps you with your homework. If you have any questions or concerns with your homework assignment, you are more than welcome to email me. I hope you have a wonderful day. Thank you, guys.